Welcome back to another episode of the Me and Money podcast. Elliot, it's awfully windy here today. How's it going over there?
It's going well. A few branches down in the yard, but I haven't walked around my house, so I'm going to assume everything's okay.
Yeah, that's right. Ignorance is bliss, right? And
Exactly.
maybe that's a good theme to start with today because there certainly have been plenty of headlines going on. So we figured it would be timely to talk about it and just maybe address some of the uncertainty and fears out there and just maybe give some general tips for what to do when there's certainly headlines and volatility in the news. So where do you want to start with this one?
I would throw it back to what is your financial plan and what does your investment policy statement say? I'm going to keep it really boring to start, and maybe people will tune out at this point. But I was having a conversation with a client earlier today, actually, and obviously concerned about what's happening in the world. And I think if we fixate on the headlines, going back to sort of the ignorance is bliss theme of this episode, it's really easy to get wrapped up into it, right? You read one article, you read another, you hop on social, and all the algorithms are feeding you is more like the more you click on that, the more you get, the more you spiral into it, the more you go down that hole. And so like that ignorance is bliss is really nice. Like go back to your own situation. What does your financial plan say? Because I can almost guarantee if you've built a financial plan, compliance is going to love this because I use the word guarantee. I can almost guarantee that if you built a financial plan, it has modeled something like what we're experiencing today. Not this exact scenario. It doesn't know what's happening in the world, but different stock market returns, oil going up, maybe the dollar depreciating even further than it has in the prior year and all that. It's in there. And your investment policy statement probably says what you do during these times. And hopefully it says something along the lines of, this is my allocation and I rebalance. So if things get really bad and things are out of whack in your allocation, maybe you're selling bonds at some point to buy stocks if they're down enough. But we had such strong performance last year, we're probably not there yet. So That's where I would start. What about for you?
Yeah, no, I think I just want to build off of what you said with the investment policy statement, because I know mine certainly tells in there, like, we're going to rebalance absolutely when we get this far out of alignment from a certain portion of the portfolio, right? And I was just looking at year-to-date numbers, starting this week. And if I were to have been perfectly rebalanced on January 1st, nothing would be too far out of alignment at this point. Now, is it to say you shouldn't rebalance in a time like this? The answer is no, right? Like, who knows where your portfolio is at? And I think it's still a good rebalancing opportunity. But with all the turmoil and volatility and headlines, whether it's tech related or the war, right, it really hasn't moved that much. And that's not to say that some markets haven't been doing well to start the year. In fact, emerging markets, where there probably are quite a few of energy-based companies in those markets, right, they're actually up 7% year to date. But based on the headlines, other than if you're smart enough to put two and two together, that oil prices are going up, and maybe that means by energy companies are going up, you probably think the opposite, right? That your portfolio's crashed and burned into a fiery ball. So
yeah, it really hasn't looked that bad so far this year. I mean,
no,
portfolio returns is what I'm referring to.
Yeah. And I think where I'd go with this too, there is a slide that I always show my clients, and I should have had it prepared for this, but we do have some audio only listeners. But it's almost a certainty every year that there's going to be a 10% decline in the S&P 500 specifically, and that's probably true of just about any market sector. And that is just when expectations don't meet reality, right? We didn't necessarily see this happening now. I mean, maybe you had reason to believe that there was some tension there and it was going to happen at some point, but we didn't know when. And that's where I think a lot of people get into trouble with, making timing decisions on their investments. And on the flip side of that, we don't know how long this is going to last. Some people say it could be over in a couple of weeks. Some people say this thing's going to drag out for who knows how long. But the truth is, none of us really know that answer. So it's not really time to panic and make wholesale shifts in the portfolio. And I don't think it ever will be.
Yeah. And Matt, you hit on something that I just want to draw out for our listeners here. and say it slightly different, but it is abnormal if we don't experience a 10% decline in a year. Right.
Yeah.
And so I think that's really just important to keep in mind. We don't know what's going to cause the 10% decline or more. We just know it happens. And so we can always go back and attribute some event to that. But, I always like to go back to that because regardless of what's happening in the world, so far it's normal. It's just the event we feel we're experiencing right now is abnormal because it's not something that happens every year.
Yeah. Well, and that's something where maybe we should have like a 10% down episode. Like, because it was probably almost a year ago when Tariff Day happened, and that was the 10% decline. And, I was just actually on a call with the client today, and she was a little unsettled, which is totally normal. But, I said, if we went back 365 days from now, which includes, the Tariff Day and all that stuff, like this portion of your portfolio is still up 16%. And she didn't believe me, but, we obviously have the data to show that.
Sure.
And it is kind of interesting how it is always something. We just don't know what it's going to be, when it's going to happen. And it's kind of comical that it happened just about a year ago with the tariffs.
Yeah, the timing is always strange. And I just want to be clear. We're talking about portfolio market returns and we're sounding very calm. Obviously, there's a lot of scary things that happen in the world. And that's a different story altogether. But, Matt and I were only experts within financial planning and investments. So that's really what we can talk about on that end of things.
Yeah. And it goes to what you were saying about the investment policy statement, though. The real point of that is to separate like the emotions and the human problems that do sometimes surround these market events from your investments and how you handle those. Right. And that's where, again, those have been a lot of the conversations. Like, it's not to say, what's going on isn't terrible. And there's certainly a human collateral piece to this whole thing. But what does that mean for your investments? Like, not the same thing. Right.
Yeah. I mean, companies are still going to try to earn a profit and do everything possible to do that, regardless of what's happening in the world, right? We could insert war, high inflation, deflationary environment, currencies appreciating. I mean, whatever it is, a shortage of raw materials, like all of that, companies still going to come back and say, okay, how do I turn this into a profit? And I'd throw out there as part of that investment policy statement, I'm not encouraging this, but Matt, you had talked about like, I don't see a scenario where we should ever be making wholesale changes. And I think for anybody listening who might be tempted at some point, if you feel like you have to do something, do a small something. I found this effective over the last decade or so. Like if you really need to do something, set aside $500, $1,000, whatever is like a small amount, but a meaningful amount for you, and go do that risky bet or gamble, right? If it's, if that will make you feel better, I'd much rather you do that and lose $1,000 than make a wholesale change on a portfolio that ends up potentially or most likely being wrong. I don't know how you feel about that, Matt, but I think that that's healthy.
I don't disagree with it, but I've seen this play out, right? Okay, if I only take the $1,000 bet and it goes really well, then next time when I have this hunch, I'm going to take a bigger bet because I should have last time. Secondly, rather than assigning a dollar amount to it, arbitrarily, like what can you afford to lose, right? Yeah. Like, I don't know. And this is where, again, some people like to do this for a hobby. There's nothing wrong with that because there are people who, spend thousands of dollars on travel or they like to go to nice restaurants. If this is your hobby, very different thing. Like as long as you're not really putting yourself, in big time exposure land, which open Wall Street bets and you'll see it. But secondly, it's one of those things where if you do have your actual portfolio and you are thinking about making a change, and I'll never forget like having this conversation with a client last year when they were really excited about gold. And I think we probably talked about this in the gold episode last year too. But what do you replace? And what happens if that was the wrong piece to replace, right? Yeah. And that's where I think you're just opening yourself up to a lot of regret, and either on the positive or the negative side, like, oh, I could have done more or I shouldn't have done that at all. And I think I would probably tend to agree, like if there is just a piece of money that you are okay parting ways with, like go take the bet. Like it's not a terrible thing, but realize you're gambling. You're not
Yeah.
investing in it. Probably shouldn't be a large portion of your portfolio.
Yeah. I like that framing of what are you willing to lose? I think that's a really important question as part of that. Again,
Yeah.
hopefully you make no changes and you just follow your investment policy statement. But, if you you can't talk yourself off a ledge, I think that's a decent alternative. And I've done this in the past. It's not a meaningful amount of money, but occasionally I'll give myself one stupid trade, and I do call it a stupid trade per year. I haven't done it for a few years, but it's something I used to do. And it most of the time it didn't make money because it was a stupid trade.
Yeah. But hey, sometimes it is fun to take a swing and see what happens, right? And you feel really smart if it does work out. But like you said, it typically doesn't.
I felt lucky personally, but
yeah,
maybe you feel smart.
Yeah. No, well, I wouldn't say smart, but I think too, like if there are companies that or areas of industries that you're particularly interested in, like I think that can be a lot more gratifying than just, oh, well, oil prices are going to go up, so I'm
betting on the price of oil.
All my money into oil, right?
Yeah.
But if you I don't know, I remember back when I was in college, I took a trip to go to this boat manufacturing facility because I like to be on the lake, and there's a particular brand of boat that I like to follow.
Uh-huh.
And so I invested in it and it did well, but that was totally a stroke of luck, but it was more enjoyable to watch because I cared about the company, not just trying to pick the next hot thing that I know nothing about.
Makes sense.
Yeah. But yeah, I don't know. What other conversations are you having with clients just around the turmoil going on overseas?
It's just that fear of the unknown, which I think is a natural thing in investing. And, I think you'll see, my guess is you'll see headlines that talk about unprecedented times for XYZ. This has never happened. And truthfully, it has happened. I mean, not this exact scenario, but something similar. So again, ignorance is bliss. Sort of tune out the financial media to the extent that you want to or can, but it isn't helpful. And I don't know how many times I can say that or how differently I can say that, but the Dow moving 500 points in a day, or oil being this way, or markets responding to Trump saying XYZ, it's somewhat of a headline world right now. And a lot of market returns, I will say, in the short term are being driven by what's being said, because it's hey, our tanker is going to make it through the strait. Today they are, tomorrow they're not. We're sending people to escort, or we're not. All of that is going to drive it, because the stock market, just as a refresher, it's a forward-looking mechanism. So it's looking in the future and saying, okay, how are companies going to produce money? What happens? Do we actually get oil back in production and all of that? And so don't think that it's rigged against you necessarily. Just know that in the short term, those things happen. Longer term, it really is about company fundamentals.
Yeah. Yeah. And I mean, we can look back at, again, trying to not necessarily pick the hot thing, right? Oil prices were negative back in 2020. There was that period of time where, wow, no one saw that coming. And I think it would be so fun to go back and listen to podcasts, during the pandemic, and just compare and contrast what predictions were. Because the one I always make fun of is if you had asked me in 2020 that interest rates on a high yield savings account would be close to 4%, I would have never believed you. But here we are. And remember the hot thing back then, those I bonds, and how many people really want to be holding those things and logging into that website now. So, but yeah, it's always a headline world. And I would just encourage you, if you're really feeling overwhelmed, try to seek out the other side of the story and just maybe ground yourself a bit, because every news channel, regardless of where you like to tune in or who you follow on YouTube or Facebook, they're trying to tell their story in the way they want to tell the story. Just seek different opinions, and not saying get rid of your feelings, but at least ground them with the other side of the equation too.
Yeah. My standby is also just go take a walk, clear your head, see what comes up. You probably feel a little bit differently when you come back, would be my guess.
Yeah. And who knows, by the time this airs, maybe it's all over, maybe it's not. So time will tell. I don't think it'll be over, but
I'm with you.
All right. Well, we hope this was helpful. We know it's a shorter one this week, and yeah, we'll see you next time.
Sounds good, Matt.